Wealth isn't built in these short, sudden bursts. It's earned the same way Joan Benoit earned that gold medal, with relentless focus, often when no one's watching, and especially when the world is telling you otherwise, or the world is telling you to stop. That's the work that we're doing together. We're not chasing headlines. We're not trying to outguess the markets, but we're running our race with purpose. On the way home from our trip, we actually spent the 4th of July in Aruba. And on the way home from our trip, I happened to watch a masterclass online that featured Joan Benoit. So growing up in South Portland, Maine, you didn't have to be a runner to know the name Joan Benoit, or Joan Benoit Samuelson as she is now. The Cape Elizabeth native was a legend on the roads long before she shocked the world in 1984 by winning the first Olympic women's marathon. But to really truly appreciate what she did, you have to also remember when she did it. So she came of age in an era where women were largely discouraged and in some cases barred from participating, amongst other things, in distance running. Many believed women weren't physiologically capable of handling endurance events. Even medical professionals at the time and race directors said it would be too damaging or too risky or just too much. And it wasn't until 1972, and this was 12 years before Joan's Olympic triumph, that something called Title IX was passed, finally requiring schools and universities to provide equal athletic opportunities to women. But access doesn't necessarily equate to acceptance. The resistance was still strong. There were no guarantees, no cheerleaders, and certainly no proven path to Olympic gold. But Joan Benoit didn't let that stop her. She trained relentlessly. She tuned out the noise. And when the world finally watched, she didn't just win. She dominated from start to finish. And her story isn't just about running. It's about conviction. It's about patience. It's about the quiet courage to stick with a long-term goal in the face of fear and uncertainty and doubt. And in that way, it's exactly what successful investing looks like. And we're at the midpoint of the year. And often during this time of year, we report on progress of our clients' financial plans during what I think all of us would agree was a tumultuous first 6 months of this very, very eventful year. And starting off, we need to remember a handful of what we call timeless truths about enduring successful investing, principles that guide our work together toward our clients' goals. And then we proceed to some more of just the current observations that we've seen and that we're looking ahead to. So general principles and always good reminders. We are a goal-focused, planning-driven, long-term equity group of investors and advisors. Our portfolios are derived from and driven by the most important financial goals and not any view of the economy or the markets. We don't believe that the economy can be consistently forecast or the markets consistently timed, and nor do we believe it is possible to gain any advantage by going in and out of the market, regardless of the conditions of the day. We therefore believe that the most efficient method of capturing the full premium of the equity markets or the full premium compound return of equities is by remaining fully invested at all times. So we're prepared to ride out the equity markets frequent in oftentimes pretty significant declines that, by the way, are historically always temporary. We believe in doing so, reinvesting dividends and compounding, we would be buying lower price shares, and that by the power of equity compounding, it will be to our long-term benefit. These are the principles that we live by and that we don't stray from. And in doing so, it's also helpful to look at current conditions. And if we looked at the equity markets in the first trading day of this year, and let's say not again until the end of June, you could be forgiven for concluding that not much, if anything, had happened. In fact, a great deal happened, but at least so far to no lasting effect. So the S&P 500, it made a new all-time high back in February, on February 19th. Now, by April 8th, it had closed 18.9% lower. And that even doesn't express the degree of sheer panic. There's really no other word for it that enveloped the markets upon President Trump's announcement on April 2nd of a dramatically increased tariff protocol. Now, the panic ended just about as abruptly as Mr. Trump announced a 90-day postponement on most of the new tariffs. And in the 7 weeks or so since then, buoyed by consistent and continued strength in the economy and signs that inflation may be continuing to moderate, the index returned to the neighborhood of its early January levels. Now, as it virtually always is, the optimal course of action for long-term investors was simply to continue working your plan. That's what we encouraged our clients to do. And as the second half of the year begins, that recommendation still stands. And please don't mistake this for an economic or any kind of market outlook. We don't have any such forecast for the next 6 months, any more than we did back on January 1st. The only forecast that we have is that excellent businesses of the kind that we own will go on innovating over time. They will continue increasing their earnings. They will be raising their dividends and supporting all of our clients' pursuit of their long-term goals. Panic doesn't often seize the investing public as suddenly as it did in that first week of April, right before tax time. Nor does it vanish as suddenly as it did the following week. Still, this episode can and should serve as a tutorial of sorts. The lesson is that investors succeed over time by continually working their plan regardless of the current crisis. Others fail by reacting to these negative events and liquidating even the highest quality equities at panic prices. We believe that always the fundamental choice in investing in our mission, which we cherish, is to help you and our clients to continue choosing wisely. So Joan Benoit, she said, the triumph is in the trying. She didn't run to prove anyone wrong. She ran to prove what was possible. That quiet determination, that willingness to train through doubt and discomfort is the same mindset required to reach financial independence. Wealth isn't built in these short, sudden bursts. It's earned the same way Joan Benoit earned that gold medal, with relentless focus, often when no one's watching, And especially when the world is telling you otherwise, or the world is telling you to stop. That's the work that we're doing together. We're not chasing headlines. We're not trying to outguess the markets, but we're running our race with purpose. So when the volatility hits, and it always will, remember that we've trained for this. Remember that we've built a plan. And remember that we're sticking to it. Because in the long run, the triumph has nothing to do with the prediction. The triumph has everything to do with the discipline. So go out there and be relentless, everyone, and have a fantastic, fantastic week. Thank you.